people are clearly buying the rumor right now. So we'll sort of see how the news event itself actually plays out. But the long-term trend is definitely a drift higher. I'm just wondering if, maybe we're getting a little too ahead of ourselves for the sell the news event.
Good morning, GM, everybody. Welcome into another Coinage News Recap. I'm the host of Coinage, Zach Guzman, coming to you live from our Brooklyn studios in New York City alongside our head writer, Andre Bagansky, here with me in the studio. Sir, happy Monday.
Happy Monday, Zach. How's it going?
It's going great. We got Bitcoin north of 71,000 as, I think excitement comes back. It's going to be a very busy week, Andre, as we're looking at the price chart here because we've got a huge inflation report on Wednesday, and no shortage of headlines to discuss as we wrap up a huge case the SEC won against Terra. We're going to get into those details, as well as a big guest that you booked on here for us, the Amberdata.
Yep, Greg Magadini, Director of Derivatives. Excited to have him on the show. I think derivatives is something that people don't pay attention to enough in this space, and we've got some record-setting activity in March, Zach, that we're going to dig into here for people. So
yeah, the halving is getting closer and closer. We're going to chat that, as well as NFT NYC wrapping up. I spoke there, maybe lighter, shall we say, in attendance than maybe what some people had hoped for. So we're going to chat about NFTs, whether they're dead again, RIP, as well as the fund flows. Per usual, GBTC may be looking a little shaky. So a lot to get into, and we're going to be chatting with Greg, as Andre said, a little bit later on in the show. But Andre, why don't we start with just this recap here, because the SEC has been notching some wins. They finally, it basically took about the same time that we saw the SBF deliberations take, about half the amount of time. For the jury to deliver their verdict. And they found Terra and Do Kwon liable for fraud in the civil case, and another big win for the SEC.
A huge win for the SEC, and something that I think, was really interesting to see in terms of how the case progressed quickly, mind you. You were there on Friday, Zach, when they were just starting to get to the determination. I know that there was an earthquake in the courtroom when that happened on Friday. Tell me what that was like to go through.
There was an earthquake, yeah. For everyone who's in the greater New York City area, we all felt that one. And, Andre, being on the 14th floor during an earthquake is already kind of spooky, And I'm from California, so I kind of knew what was going on. But everybody else in their suits, their East Coast elites in the room, were kind of freaking out a little bit. Who was not freaking out, though, and props to the SEC, it's kind of badass. Basically, in their closing argument, that's when the earthquake struck towards the end of it. Didn't flinch. She just went right on through. Finished for the last 4 minutes while everyone in the room's kind of looking around like a dog in an earthquake, just being like, yo, what the hell's going on? Didn't flinch at all, which shout out to the SEC. Kind of cold. It's a cold move. It's a badass move.
I kind of love that.
To not even stop. And then after Judge Rakoff basically said, I'm looking at reports. It was an earthquake if you felt that, though. According to the SEC, it was the force of their argument, and that got a bunch of laughs.
Sure.
Judge Rakoff cracking a lot of jokes during this trial, but nonetheless, even as funny as that was, the verdict coming through, also, I think you could say maybe a bit of an earthquake, sending jitters through crypto, because it's another big win in terms of what was on trial here, is essentially how far you can stretch the truth as a crypto founder. And the verdict was that you really can't, turns out, misrepresent certain things, and Terra and Do Kwon both being found liable.
Yeah, in terms of the SEC's argument, it boiled down to Terra making it seem more successful than it really was, or more stable than it actually was. And when you boil down sort of the charges that the SEC brought, they specifically called out this secret relationship with Jump Crypto, where Terraform Labs received help from them to sort of restore the peg for Terra's algorithmic stablecoin. The other portion of that, Zach, being the fact that Terraform Labs and Do Kwon lied about Chai, a large payments app in South Korea utilizing the Terra blockchain. So two things, right, where it's all focused on the company and what the founder is saying in terms of what they're making out to the public about the technology that they're promoting. So
yeah, and I mean, look, we're playing B-roll right now from our special, right? This is basically what put Coinage on the map back then. And, it was interesting to be in the courtroom and seeing exactly what we reported 2 years ago, having that reporting be corroborated in real time. And also one of the main whistleblowers in this case, the SEC's main whistleblower, Aaron Myung, who was chief product officer at Chai, actually tweeted and said, you guys were, I'll just read this. I don't know if we can see this Texas right now, but he was basically the whole thing that I think won this case for the SEC. He had recorded clips with Daniel Shin, other Chai employees, to basically put them on the spot and say, look, are we misrepresenting what's actually happening here? And those clips were pretty damning. I think they had a huge impact on the jury in this case. And he responded. I was just talking about, everything that we put out there 2 years ago. We had a lot of criticism for it at the time because they're like, why aren't you really tearing Do Kwon apart? It was like, we wanted to figure out what actually happened. And here he is. He's saying you were on the right track with your mini doc, and it impressed me, though obviously I couldn't say anything at the time. That's because he was a whistleblower and basically working with the SEC on this case. But really cool to see. And, I think, again, in crypto, no reporter has the power of subpoena. You know this. Anyone who covers a space can't really squeeze the truth out of people. And it's shocking how many times, sources might not be honest with certain details. And I think that, unfortunately, it's like a lot of trials are necessary to kind of get to the bottom of what happens.
Are you surprised to see this takeaway, Zach, or this ultimate verdict that was reached? I mean, you're somebody who's covered Do Kwon and Terra pretty much, for as long as it's been relevant, as far as I know. And, in terms of the overall arc of Do Kwon, obviously this is not the last we'll see of him in court because he's facing those competing extradition requests from South Korea and the U.S. government. Where do you think we stand as of now in terms of Do Kwon's story?
I mean, I think, obviously a lot of questions now that this verdict's been reached, what happens next? We're still going to have to see what Judge Rakoff and the court decides to do when it comes to fines and restitution. I think Terra had already filed for Chapter 11 to kind of get ahead of this potential outcome. And so we're going to see what comes from that. But you're right. There's still the criminal proceedings hanging over both Terra's and Do Kwon's head when it comes to South Korea or the U.S. The extradition battle still going on. So I think, it is one thing to find people liable for fraud. I think it's another, and we're already seeing a bunch of conversation around this right now, is like, is this as bad as what happened with FTX? Certainly the outcome very similar on a monetary scale, $40 billion getting imploded, but very different in the way that this case was put in front of the jury. And I don't know how a criminal trial would go, but I mean, it's very different, both in what you're dealing, how far you need to show, like in terms of criminal intent beyond a preponderance of doubt versus the burden of proof in a criminal trial being beyond a reasonable doubt. Like, you really got to know if you're a jury. And I don't know. I mean, it would be an entirely different situation, and certainly depending on where Do goes, we'll see. But you're right. It's far from over.
Well, I think in terms of the sympathy that he gets from the crypto crowd, I think there's something especially insidious about what Sam Bankman-Fried did in terms of touching customer funds. I think in the crypto space, there's a little bit more of an acceptance in terms of experimentation and in terms of trying new things, but you touch customer funds and you're pretty much, your name is mud, as Kaplan would
That's
say.
kind of the genius of this, though, man. I mean, like, it was not like Anchor was not it was self-custodial. Like, everyone was putting their money in and can get it out. We saw even, quote unquote, like the victims in this case that were on trial, one of them being a former jump trading software engineer, got his money out and made $7,000 in Anchor. So it's like,
so he was
the genius of what happened here, and they're both very similar as leverage in both systems in Terra and FTX. You're right to point out the difference is very easy in a fraud trial to show where SBF and what happened with FTX, where that became problematic, because you're right, customer funds very easy to identify. For Terra, it's hard to explain that to a jury and have them understand all this if they don't understand how it was like to work with Anchor or to like have a self-custodial wallet and put because that's where it all melts away. And so if you're Do and Terra, that's very important to your defense. If the jury doesn't understand the differences between like a bank account and,
Sure. I think what Do Kwon and Terraform Labs got dinged here was lying about the project as opposed to, stealing customer funds and then lying about that.
But is that I guess, is that worthy of what we saw with SBF and like years, decades in prison? I mean, that's the other question that is still unanswered here. And so,
well, yep. And he won't get any jail time as a result of this case, but
no, not
Judge
this
Rakoff to determine. So.
Anyways, that is the ending of that chapter. And certainly I think people are very interested to see what happens next in this space. And the big thing, Andre, that we've been watching is the countdown clock to the Bitcoin halving. I think this one's interesting because as much as we talk about everything in the market being known, there are still a lot of people who have a lot of money in Bitcoin who don't know that every 4 years or so that this happens.
Yeah, no, and so 2,000 blocks away at this point, it's slated to happen on 420. Bitcoin's most people know this in crypto at this point, Zach.
In crypto, but it's like, I don't know. It's like I got people asking me, like, what's the Bitcoin halving who have money in Bitcoin? Shout out my dad, saying like, yeah, what's this all about? And it's like, I don't know. How many people are in that camp?
Well, as most people know at this point, Bitcoin's per block rewards are going to fall from 6.25 to 3.125. And happening every 4 years, this essentially limits the amount of new supply of BTC that enters sort of the monetary system that is Bitcoin. And, what typically a bull run has followed, but people are sort of, pressing pause on that, or at least raising warning flags. We've got a report from CoinDesk up on the screen, and it was interesting to see Coinbase analysts David Duong and David Hahn sort of say that this may be priced in because Bitcoin's hitting all-time highs before the halving even takes place. When you look at sort of previous cycles, 4 of which have happened in 2016, at this point relative in the cycle to the halving, Bitcoin was 60% below its all-time highs, 50% in 2020, and only 8% in 2014. So definitely unprecedented, this area that we're going into. And it really is because of these spot Bitcoin ETFs, where institutional investors are able to allocate capital to it much more easily than they could in the past, and essentially have it be compatible with their brokerage accounts and registration requirements that they have to abide by, Zach.
Yeah, these other comments that the ETFs could see rapid outflows, which exacerbate selling pressure. I kind of would be on the other side of that, mostly just because, we talk so much about Bitcoin kind of being a narrative-driven asset. And the halving, we got so distracted, I think, with the ETFs. No one had really talked about the halving until basically now.
I wonder that because, like, when you go into these analyst reports and you sort of say that, like, Bitcoin being above new all-time highs pre-halving, that sort of like indicates, according to these analysts, that there may be actually a more saturation in terms of what the halving could result by. Almost people trying to front run that narrative in terms of like a bull run happening after.
Yep.
So, the countdown is 13 days. I'm not expecting to see anything immediate, Zach, but sets the stage for something good in the minds of some analysts.
I think so. And obviously, again, I still think that there is a lot of, I don't want to use the term misinformation in this space, but just ununderstood things about Bitcoin that, like, even you could even be in TradFi and be like, okay, I understand it, ETF buys Bitcoin, but don't understand the underlying technical components to what happens behind the scenes.
There's always another layer in crypto, Zach, when it comes to understanding these things. But I think for me, one of the important things that I'm going to be keeping an eye out for is just like, how much mainstream coverage does this get? Is it going to get its own segment on CNBC? Probably. Is it going to be on the front page of the Wall Street Journal? Probably not, right? So where does it fall in between that mix? I think for me that is suggestive of just like, whether or not it'll be, mainstream.
It's a very good question. I think it will be more so now because it is, again, riding that wave of everyone paying attention to money flowing into Bitcoin. Throw some fuel on the fire. We'll chat Bitcoin halving for sure to come. And obviously, we're going to be chatting it in just a few moments as well with Amberdata's Director of Derivatives, Greg Magadini, to get his take on what that might do this time. But shifting away from Bitcoin to, I think, what is, something that we don't talk too much about on this show, despite the fact that anyone can mint an NFT to go on Coinage with us. NFT NYC, Andre, wrapped up last week. I was speaking there a little bit lighter than a lot of people had thought.
It could just be me. It could just be us. Well, I'm sure some people partied hard last week.
Yeah, well, all right, fine. I'll give you that. At the actual conference, a little bit lighter than foot traffic than maybe people had hoped. And this segment, NFTs dead again, raising the question of whether or not NFTs are dead again.
Maybe, potentially, definitely not. They are going to come back, right, guys? We've got an article from DL News talking about how NFT sales declined for the 4th consecutive week in a row. And when you go and you look at the data at Crypto Slam for the month of March, we had 1.1 trillion worth of NFT sales, which, sounds like a lot, but it's worth like sort of putting a caveat in there that this data does include some Bitcoin meme tokens. So even then, meme tokens coming in, sort of inflating these sort of numbers. But among specific projects over the past month, 46 million for Node Monkeys, 37 million for Bored Ape Yacht Club, 34 million for CryptoPunks and Mad Lads. So when I looked at these top collections, Zach, what I'm really seeing is Bitcoin, Ethereum, and Solana really being the main sort of networks where people are sort of, buying or selling NFTs. And it's to me, sort of suggestive of where this market may go in the future, where it's like, if you're going to look for a community, if you're going to look to get involved in terms of NFT trading, it really does seem like these are the big three chains that everybody should be watching, Zach.
Yeah, I mean, I'm just looking at the Crypto Slam chart that you talked about here in terms of volume, and it is a steep drop off in terms of, if we can get those. Yeah, there we go. Pretty steep drop off down here, Andre. I mean,
Yep,
that is wild. So I don't know how much of that is like just a virtue of, you know, liquidity drying up when it comes to these markets and shifting over to meme coins, because why would you trade these if you can just trade meme coins? You don't have to worry about the art. You don't have to worry about collectors. I was sitting actually at an NFT NYC dinner across from someone who was in the art space. Won't say where, but basically her whole job was working with creators to put art out as NFTs. And she's like, basically that whole business is gone. Like, can't even try and convince artists that this is going to be good for you anymore. So like, I don't know. That was all the catalyst essentially back then, was the idea of Christie's, all the big auction houses like really leaning into NFTs. And if that's the opposite happening now, I'm not surprised.
Yeah, when you talk about big art auction houses, those will always exist in terms of driving it. But I think you're totally right, where we can't talk about like sort of like the ailing NFT market without pointing out that meme coins are exploding in terms of people's popularity and people's attention. And, you know, just for example, when it came to NFT NYC last week, you know, I saw events for PopCat, for With, for Shroom, all these Solana meme coins. We went to the Avalanche Creator House together, and there was a meme coin called Cock that people were talking about quite a bit. So COQ, yes, like a rooster. And I think it's very, I do wonder whether that was a headwind for NFT NYC this year. Just the fact that meme coins really are the hot thing that people want to engage with.
It's a good, I think it's a good counterpoint. I also feel like, you know, you mentioned Cock and you mentioned we were there at the Avalanche house. This is something that I've talked about before too, is just this idea of Avalanche lagging Solana, and Solana meme coins are exploding right now. What happens with Avalanche? Who's to say? And obviously disclosures, Ava Labs being an investor in trustless media, have to put that out there. But Andre, I think we are seeing a lot of people, myself included, maybe say, what happens if any percent of that excitement of what's happening on Solana right now shifts over to Avalanche? The Avalanche Foundation supporting some of these meme tokens by scooping them up and holding them in a treasury, holding Cock in treasury, which is so weird to think about from a company, Ava Labs, that has been basically really the only crypto project in the room with the suits, talking to Apollo and JPMorgan and working on this, but then also at the same time scooping up meme coins. Like, they're playing both sides.
It does feel a little, you know, hello, fellow kids, you know, that
it does,
that little thing.
But they're doing it.
But in terms of just like other chains, you're right, where it's like you have Bitcoin, Ethereum, Solana, and then you have the competitors. I was just looking to see, like, you know, Polygon, Flow, and Immutable. Like, you've got some big projects that are driving that there, and it's really DraftKings for Polygon, it's gaming for Immutable, and then NBA Top Shot for Flow, which is just like, you know, it's their namesake in some ways. So interesting to see what's sort of like hanging on to an extent in terms of these almost like
tell you what,
specific chains, if you will. So.
Yeah. Well, I mean, you mentioned Dog with Hat too, and I mean, as far as meme coins hanging on, that one's hung on a lot longer than I really thought it would. I didn't see that coming, but I'm looking at it right now. We're still north of $4 billion in market cap. Like, I don't know, man. I don't know how long this meme coin run goes. And maybe it's really just getting started. I don't know which camp you're in.
Maybe. No, you know what? I don't engage with it, and it's hard because it is so short-sighted in terms of the meme coin thing. I remember when they got enough money to advertise on the Vegas Sphere, I was like, okay, when that comes, that'll be over. That'll be the sell signal. But I don't think it's happened yet. Something like that, right?
You mean in terms of the ad actually being up on the Sphere?
Yeah.
It's weird because it's like the news cycle is like, okay, we're fundraising to put an ad on the Sphere. That's like news. Then it's, okay, we hit our fundraising goal to put an ad on the Sphere. That's also news that you could sell. And then there's we actually put the ad on the Sphere. And if you're thinking like buy the rumor, sell the news, you've got 3 opportunities to do so. And
I haven't seen any yet. No.
Well, either way, I would agree with you. Maybe some of this is a little bit more short term, but let's talk about maybe something a little bit more longer term, which is both Bitcoin and the flows that we've seen, because per usual, we always watch the fun flows. And interesting to maybe see people start to speculate. Look, we've been talking a lot about GBTC and Grayscale, of course, kind of the leader in the space, the first one to convert an existing fund into a Bitcoin ETF. They led the charge. But Andre, they continue to bleed funds each day, millions and millions of dollars flowing out of GBTC. Some people are basically saying that by the summer, is that what I'm reading right? That Grayscale could run out of Bitcoin by the summer?
Yep, and no, we've got some we've got a video that we're going to show from Bloomberg, one of the Bloomberg boys at one point sort of pushing back against that assertion. But yes, GBTC has averaged outflows of around 5,000 Bitcoin per day, and starting off the year with 618,000 at its current clip, it could theoretically run dry in the next 3 months. But let's play that clip from James Seifert, who's sort of saying that as these bankruptcies sort of run through their process, that outflows should stay around 100 million for the foreseeable future, or at least he would be surprised if they go above that. So let's see if we can play that clip.
So our view is basically that the massive daily outflows from GBTC are likely to slow, but they're unlikely to see any amount of inflows. So yesterday we saw 75 million out of GBTC. I think the numbers will be more similar to that going forward, that $100 million range, likely less, potentially a little more. But if we're going to see daily outflows, they shouldn't be the $300, $500 million numbers we saw that were due to those bankruptcy estates selling their shares.
Yeah, so I mean, like, I think it's interesting because obviously funds hold Bitcoin. If you're redeeming shares, they sell Bitcoin. And so, yes, you could extrapolate and say by July 8th, which is what this report basically points to, is that when Grayscale could run out of digital gold. And you just heard James saying maybe not the case.
Maybe not the case. Yep. And, I think we talked earlier in the show about these ETFs being a double-edged sword in some ways, where they can exacerbate those downturns. And I'm sure everybody remembers when Bitcoin dipped to around 60,000, I believe, like this last month. And, that coincided with steep selling from GBTC. So specifically on March 18th, it had 9.5 thousand Bitcoin that went out, Bitcoin's worth of funds that went out. And that's really what we saw in the beginning of January, where it was like for the first few days of Bitcoin's fund being live, it was like 10,000 plus Bitcoin flowing out each day. So, it was interesting to see us sort of hit that level again. But as James said on there, outflows starting to slow down. Maybe we'll slow down. Hopefully.
Well, you showed the CoinDesk report here too, in terms of why Genesis basically through their proceedings needs to get money out and didn't want to pay the fee, I suppose, in terms of like where we're going to put the money. And so, yeah, that's a huge piece of this. Obviously, that's not going to happen continually each time. So that definitely does skew the numbers, which would kind of throw things off. But yeah, it goes, you're right. Double-edged sword is exactly the way that I would phrase it as well, is that, look, Bitcoin will go up as more money flows in. Bitcoin will theoretically go down as people sell these things. Like, that's the way it's supposed to work. But the volatility, which we're going to get into in a sec, in terms of options, kind of the wild card in kind of how to piecemeal all of these things together. So
yeah, just to cap off our ETF chat, James Butterfield from CoinShares sort of pointed out that ETF hype may be moderating in terms of what he's seeing in terms of the numbers. 646 million worth of inflows into digital asset investment products last week, which is definitely like a rebound from 888 million that we saw in terms of outflows not too long ago. But again, him saying that ETF hype is moderating. So something to definitely look out for.
Okay, very good. We also want to wrap up as well. It's not just Bitcoin. Certainly this year, pretty interesting in that I think there are people playing both sides of this thing, yourself included, Andre. When we look at the approval odds for an ETH ETF, and I think a lot of people are in the camp that regardless of what happens, because May is the deadline for the SEC to basically make a decision, not seeing a lot of enthusiasm or signal that they will approve one of these things come the end of May. And a lot of people are basically saying it's a matter of when, not if. We've heard that from Grayscale before. And I don't know where you fall on this, but JPMorgan basically saying the same thing, is that it's an eventuality. You can't fight it.
Yeah, well, I mean, they're sort of saying also that it will be fought if these spot ETFs are denied in May, then a court case is almost inevitable after that. And JPMorgan saying, they have a very strong case, and sort of calling it an eventuality that we will get these Bitcoin or these spot Ethereum ETFs. Still, James Seifert from Bloomberg, who we just had up on the screen, said he's looking for something that still shows more interaction between the SEC and issuers. And, we last week, you sort of saw the SEC begin to accept public comments on applications from Grayscale, Fidelity, and Bitwise. He said this is not bullish in any capacity, and it's just sort of standard procedure, public procedure when it comes to these things. So definitely something where it's a pessimistic 25% still.
Yeah, and I would be in the same camp because we haven't heard anything. And it's unfortunate and really aggravating and kind of makes me angry a little bit to think that we're going to go through this whole song and dance again, even after the SEC lost on appeal with the Bitcoin ETFs. We're going to do the same thing. And like every reason, we already talked with SEC Commissioner Hester Peirce to start the year. She said that she also wished it wouldn't go this way and that every reason the SEC could potentially put out there makes no sense. And yet here we are going to do the same thing again. It's annoying.
Yep. And then you've got that thing in the background where the SEC could potentially be investigating the Ethereum Foundation. So
you are hot on that. You do like that idea.
Approval odds either, Zach.
No, it doesn't. And you've pointed this out. I mean, we had a guest on last week looking at Grayscale's Ethereum Trust and the discount premium to NAV, and basically been falling off a cliff here. So you had all the excitement around, what was it? Just basically the beginning of the month, last month. People thinking this was going to happen. We saw that. Basically, I guess the way to explain this is essentially the gap between buying a share in Grayscale's Ethereum Trust and
the amount of Ethereum that share corresponds to.
Yes, and we saw that gap close as people thought it would get greenlit, and now kind of not closing anymore.
Widening again, that's for sure.
That's basically, I guess, a proxy for the odds in the way that you should be reading that. But what's the way to play that, by the way?
I have no idea at this point, quite honestly. It's scary is what it is.
Fair enough. I mean, all of that again is basically where the narrative goes in terms of what happens this year, because what are the next catalysts? It was supposed to be the ETH ETF getting approved in May, and if not that, maybe we can talk about the Bitcoin halving for like a month, which seems like a lot.
Well, then it's all got to be macro at that point, right? Focused on rate cuts. That'll be the main driver in terms of, look at Bitcoin, setting new all-time highs while interest rates are still at 5%,
Yeah, I mean,
that's probably where it goes next.
From a market,
we'll see what these CPI sort of readings are this week in terms of how that informs people's thoughts on rate cuts this year.
That's what I was going to say. In terms of things to watch this week, which we always do on this show, look ahead to other news items that will be coming up. One of the big ones, Andre, is the inflation report on Wednesday, CPI for the month of March. And interesting to kind of see the market now, come back to reality. People had expected 3 cuts, maybe 2 this year instead of that, if we get that. And so many people had made so much about this idea of look out, get out of the way. Bitcoin in a market where you've got rate cuts and inflation.
And an election year.
Get out of here. It's like a lot of things going on. Yeah, and now maybe you don't get those. And now does it change some of the price targets that we had talked about at the beginning of the year?
I have no idea, quite honestly. I have no idea. If you're moving rate cuts out, I would assume that's probably not good for Bitcoin's price. So.
I'd be more in the camp that it would kind of dampen some things, but who knows? We've seen so much now lean into fund flows on these ETFs that I almost feel like it might be more of that. But of course,
let's ask Greg.
Yeah, of course.
Get Greg's thoughts on that.
We'd be overlooking all of the other elements, which again happens to be derivatives, and we got the perfect man on the show for that question. I want to bring on Greg Magadini, Amberdata Director of Derivatives here on Coinage with us. Greg, thanks so much for hopping on, man.
Yeah, absolutely. Pleasure to be on.
Well, I guess we just want to start. Andre and I have been chatting all morning about where we are in this cycle, and particularly, we've been tracking fund flows, but that doesn't necessarily bring into account what you're seeing on the derivatives front with Bitcoin. So maybe we'll just start there. It's April. We got Bitcoin north of 70K. What are you making of where we are in this cycle?
Yeah, absolutely. So again, thanks for having me on. I think right off the top, we got to consider, obviously, halving is a bullish event. There's a small sample size. We've had 3 previous halvings, but from January to December, the average return is 200%. So we started here in January around 45K. If, history repeats, really brings us around, 90, 92K by the end of the year for Bitcoin. I think the market's a little bit more bullish than that. If I look at the derivatives markets, we're actually seeing a few things in terms of positioning being built up. So we can see the futures open interest really was led by CME this time. This is the first time ever. Usually Binance has been sort of the biggest player. So we've seen a lot of buildup in the US derivatives markets through CME futures contracts. So that's a little bit of a telltale sign. The other thing is if we look at the options market, we're seeing a lot of call skew being priced into the Bitcoin options for the April 26th expiration, which obviously includes halving. So the way that I'm viewing the market right now is the fundamentals are good, but the market knows this. And so we're really well positioned into this event. So that's something to keep in mind. Typically, these types of big events, there's a theme of sell the news, buy the
Mm-hmm.
rumor, sell the news. People are clearly buying the rumor right now. So we'll sort of see how the news event itself actually plays out. But the long-term trend is definitely a drift higher. I'm just wondering if, maybe we're getting a little too ahead of ourselves for the sell the news event.
Yeah, Greg, when you talk about Bitcoin's funding rate, I saw some data that sort of said that Bitcoin's funding rate is at 2021 highs, hasn't been this high since April 2021. And
Yeah.
so sort of laid out the sort of case that this may not be so bullish for Bitcoin actually, because the last time Bitcoin's funding rate was this high, Bitcoin collapsed to $30,000 from $60,000. So if you could just unpack how that funding rate plays into markets and what it really signifies about where we're going, that'd be fantastic.
Yeah, absolutely. So the way you can kind of think of it is the cost of a leveraged long. So because you can use futures to essentially get leveraged positions in Bitcoin, um, people will pay a premium over the spot price in order to get that positioning. So as Andre said, in April 2021, we saw the most extreme futures basis I've ever seen, which was about 40% annualized for 3-month futures. Today, we're about 20 to 25% annualized for 3-month futures. We've actually come down a little bit, slightly below 20 after the pullback last week. But that's something to keep in mind. We're about, call it 3 to 5 times the risk-free rate in terms of what people are willing to pay for the cost of capital to get long Bitcoin here. And so there's this axiom in the market that the market goes wherever causes the most pain. And the
Mm-hmm.
reason why there's that type of thinking is that if everyone's already gotten long ahead of the event, who's left to get long further and move prices up a little bit more? So that's kind of a little bit of the thinking. And when we're in very large leveraged positions in the market, we're actually really susceptible to sort of these cascading pullbacks where prices drop a little bit, the most leverage have to sell to close out the position, brings prices down even more, so on and so forth. And you kind of get this market clearing sentiment. So that's something to keep in mind. Obviously, I still think that the derivatives market, with respect to the spot market is still going to be the main driver, especially with
Mm-hmm.
like these spot ETF flows and things like that. The leverage market is just a really good way to understand the sentiment of the more tactical traders
Mm.
and how they're positioned. And right now, they're positioned for perfection.
Yeah, to double down on that, Greg. I mean, when you think about that, double down for perfection is an interesting thing because no one ever, I think, can be honest with themselves and expect perfection. There's always going to be blips along the way, and certainly, as you said, we've seen that before. I'm just looking at the forward curve, basically the futures chart, excuse me, for
Mhm.
what we're looking at in Bitcoin, and just seeing for basically September 76,000, which to me, I guess, to maybe ask the same question in a different way. How frothy do you think we are when you think about how these bets are being placed right now relative to the historical nature of these cycles?
Yeah, so here's a great example. If we were looking at, really when this market rally really began in late October of last year and really through Q4, the funding basis was about 5%, which is about where risk-free rates were. And then since then, we actually rallied a little bit into the spot ETF decision and actually touched the 20% handle in terms of futures basis or funding. And then post ETF decision, it came all the way back down to say, call it 5 or 6%. So the true range of where we are today, in my mind, is we're about 3 to 4 times that 5 to 6%. So we're pretty elevated in terms of going into this event.
Hmm, interesting. So it's pretty frothy, I guess, is mainly the answer to that one there.
Yeah, there's a little bit of susceptibility to some sort of cascading sell off if we get it. But that being said, people who are trading these futures, they're not dumb. There's a good fundamental catalyst for this to move higher, which is the halving, and maybe what we get after that as well. But it's just important to understand that there's some susceptible positioning. And from a trader's perspective, there's better trade structures than just being long that you can do in order to take advantage of this kind of extended positioning.
Mm. And you know, to bring it back to something you said earlier, which is the fact that the CME is leading in terms of this derivatives volume, and traditionally you saw somebody like a Binance maybe in that role. Like, do you think that's just more reflective of the institutionalization of crypto, or maybe a more sophisticated market in some ways? And what sort of implications might that have? I'd be really curious just to hear, like, is it significant, the CME versus Binance, in terms of where these traders and who these traders are?
Yeah. So off the top, yes, I think it's very significant. And the reason why I think that is because at the end of the day, the most developed financial market in the world is still the American markets. And so once we have the sort of appetite or the animal spirits of American investors to get long Bitcoin from a beyond just retail, that's actually a really bullish sign. Now, if I where there's some like cool opportunities hidden out there is that if I look at the CME futures open interest for Ethereum, well, there's almost no uptick in the CME OI for Ethereum, and the OI for Ethereum is still way below Binance. So what this tells me is that the spot Bitcoin ETF narrative has really been leading sort of the institutional adoption here in the US to start establishing positions in Bitcoin. So that kind of confirms that thesis. And then what else it shows me is that if we're looking for an alt play that has similar dynamics to Bitcoin, which is we might get a spot ETF, the supply issuance rate is actually decreasing to negative for ETH. There's kind of the same types of fundamental dynamics. We just had the Dencon upgrade. So all those things are laid out in a similar fashion, but the market hasn't priced that in yet. So that's kind of something that's interesting to keep in mind.
You know, I love this idea of, you know, this being a Bitcoin-led institutional sort of phenomenon, because when you look at Bitcoin being at all-time highs before the halving, to me, my initial thought is this, you know, maybe there's a greater saturation in the institutional world for the Bitcoin halving than maybe people appreciate. And because you're getting these Bitcoin ETFs, obviously people diving into the space, maybe this is people trying to get ahead of that narrative in some ways. Would be really curious on your thoughts on, you know, your average sort of institutional trader and their understanding of something like the halving.
Yeah, I think for the most part, really the institutional picture is a little bit more naive than that. I don't mean that in a negative sense, but I just mean
Yeah.
it's a lot more. I need allocation to this asset class from a diversified portfolio perspective. And I
Mm.
don't actually really care too much about the fundamentals of Bitcoin. I almost have to not even, I can almost get away with not paying attention to them at all. Because at the end of the day, if I have uncorrelated returns with a positive expected value asset, like you just need to add that to your portfolio for some allocation, and
Mhm.
almost nothing else matters.
Yeah, Greg, we had another question too. Andre and I were chatting earlier about kind of now seeing the same exact history repeat itself when it comes to the potential SEC denial or approval of an ETH ETF, and you just kind of walked us through the timeline for what happened with Bitcoin futures and derivatives around the approval. It's interesting to kind of look at the preview of what's happening now with this premium versus discount to Grayscale's Ethereum Trust. Andre and I have been talking about this for a couple weeks now. It had been closing as people expected it to be approved, and now widening yet again as people are kind of coming to the reality that the SEC is going to play hardball most likely and deny it, and then we're going to see a court case again. I'm curious to kind of get your take on the right way to play that now, and maybe what you're seeing play out when it comes to Ethereum, because it does really seem like history is again repeating itself here.
Yeah, I think your analysis and perspective on looking at the net asset value discount is a great way to look at a proxy for the probability of a spot ETF. Right now, if I look at the options market, we're seeing kind of similar types of pricing where the put skew in Ethereum is bid over the calls, whereas it's completely inversed for Bitcoin. And that's really showing me that the market is pricing in the likelihood of a failure for the spot ETF in by the end of the May. So I think that is pretty much like a done deal. I don't think we're getting a spot ETF at the end of May. That
Mm-hmm.
being said, though, I do think we get this kick the can down the road approval decision a little bit later. And looking at the net asset value discount in ETHE combined with, say, selling an Ethereum future, which is also trading at a premium, just like Bitcoin, but those have to stay a little bit more in line due to funding consequences. You could sell the future, buy the ETHE, be delta neutral in terms of your risk exposure to the underlying ETH prices, and just collect collapsing discount and premium in the future. So the futures come down, and theoretically ETHE discount goes away as we approach an actual spot ETF approval. That would be an interesting way to play it and really isolate that type of trade.
Interesting. Greg, it's wonderful to hear you talk with such sophistication when it comes to derivatives, because I think it's something that, kind of maybe get overlooked by retail traders who are mostly in the spot market, as far as I understand things. If you are a reader out there or a listener at Coinage who is just starting to sort of unpack this world of derivatives, what are some keywords? What are some stats or pieces of data that you recommend people watch to get familiar?
Yeah, so when you're looking at the options market, really what you want to look at is implied volatility. The relationship there is that options are essentially one-way bets. When you buy an option, the most you can lose is your premium, but the most you can gain is, in the case of call options, infinite. And so one-way bets, the way that they're priced is, how volatile is the underlying asset. So how Bitcoin has moved in the past is historical volatility, or also known as realized volatility. And how Bitcoin is expected to move in the future is implied volatility, or what the options market is implying for future volatility. And so looking at the relationship between those two is a really great place to start. And then if you're trading perpetuals and futures, you want to look at basis in terms of futures, or you want to look at accumulated funding in terms of perpetuals. And what I mean by that is you look at a perpetual contract at the beginning of the year, say January 1st, to today, what's been the total funding that you would have paid for a long position from year to date? And it gives you a really good idea of sort of the annualized cost of capital. And so now you can decide, is it worth it for me to get long the perpetual, or, should I go the more traditional route and get a bank loan at a fixed rate for 8% and invest that in actual cash Bitcoin, stuff like that. There's a lot of really interesting alternatives there. And so that's essentially what you want to do there to understand how expensive is the market. And then it gives you a really good idea of how established or how many positions have been built up in that market.
Wow. 101 derivatives with Greg. Really appreciate it. No, seriously. But, one of the things that, as someone who maybe, thinks a lot about Robinhood or these apps that people like to engage with, one of the things that I've heard murmurs about is the idea of establishing options for spot Bitcoin ETFs. And I'm curious on your thoughts about whether or not that would be a significant development and sort of maybe the possibilities that it could unlock.
Yes. So I think that 100% happens. I think that's very significant. I really think that's a 10x moment for crypto volatility trading. We do already have options on the instrument called BITO, and some of the derived BITO ETFs, such as BitX, which is a 2x BITO. So there are options there already. The problem with an instrument like that is that there's so many moving parts. The ETF is a derivative of the CME futures, which is a derivative of the crypto facilities benchmark index, which is a derivative of spot markets, essentially. And so you have and then you're trading derivatives on top of that. So you have this kind of this train of derivatives that is really hard to price, and it kind of puts people off. No one really wants to buy and hold BITO, even though they would buy and hold Bitcoin, just because there's so many kind of implicit carry costs into that position. The spot Bitcoin ETF having options on it is just a cleaner product. And I really think that's the moment that we get a huge unlock for crypto volatility trading.
Wow. Something to keep an eye out for. I would love to see some options for spot Bitcoin ETFs in terms of the way that makes volatility go crazy.
Yeah,
It's kind of an exciting thought.
I mean, a lot of things to keep our eyes on for sure. And obviously, again, this space moves quick. And so having you on, Greg, to break all this down for our viewers, really appreciate it, and really appreciate you taking the time. Greg Magadini, Amberdata Director of Derivatives, joining us there on Coinage. Greg, thanks so much, man. We'll see you again soon.
Thanks so much.
Greg.
I appreciate it. And of course, as we say goodbye to Greg, we also must as well now, in due time, say goodbye to our very own Andre Bagansky, our head writer who's held it down for so long here, man.
It's been a real one.
It's a bittersweet goodbye, you know?
It is.
It's been a pleasure having you here in the studio, always to break this stuff down. You write great stories, the newsletters, the recap shows. It's all been Andre behind the scenes putting it all together, and can't thank you enough, man, for everything you put into Coinage.
It's been a real privilege, and super excited to have been a part of Coinage. Excited to come on the show in the future. I'm gonna go report on markets at Decrypt Media, so you can catch some of my work there in the future. And yes, very excited to come back on the show in the future and talk more markets, talk more legal, and cue you into what I'm up to over there. So.
The man's moving, and we need people here in the studio as far as the studio functions. But I know I don't just speak for myself. I speak for everyone here at Coinage when we say we're going to miss you, man. Thank you again for everything you've done. For Andre Bagansky, our head writer at Coinage for at least this week, for myself, and for everybody here at Coinage, thanks again for chatting with us, y'all. We'll see you again soon.